Hello guys, I hope that you're doing well. In this video, we will discuss all major events that move the market this week. So let's start with this very serious picture that sums up pretty well what happened on the market. This week we saw sharp declines on all major indices in Europe and also in the US. Let's take a look at a few examples. SP 500 dropped around 5% since the end of August. Then here we also have Nasdaq that dropped around 6% since the end of August, and DAX, that is German index, dropped around 3% since the end of August. Let's take a look at major event that drew this market downturn. Major event that drew this market decline was Fed's meeting on Wednesday. As we anticipated, they didn't change interest rate. However, Jerome Powell was quite hawkish in his speech, and the markets reacted quite negatively. He said that we can expect one more hike until the end of the year, and he warned that there will be higher interest rates environment for longer. Market reacted quite negatively to the news. All major indices dropped after the event, and on the other side, we also saw some changes on bond market. 10-year Treasury yield rose to highest since October 2007. I think Fed has a really difficult job here. Inflation is still too high, but economy is not adjusted yet to these very high interest rates that escalated super fast in the past year. One of the biggest drivers of inflation were food and oil prices, but we will talk more about it later. I think that economy is still struggling with very high interest rates, and I'm worried that there might still be some skeletons in the closets that might affect economy performance and consequently also stock market. New home buyers can already feel the pressure of very high interest rates. For example, fixed mortgage rate is currently at highest level since 2000. It's currently sitting at 7.75%. On the other hand, European Central Bank rose interest rates to record high. Even though market reacted quite positively to the news because they indicated that this might be the last hike. European Central Bank rose interest rates to record high on their meeting in September. Even though it's a very steep hike, markets reacted quite positively to the news because they indicated that this might be the end of the cycle. I'm especially looking at European growth because I think that Europe might be facing even more difficulties than the US. I'm especially looking at Germany because it is the leading European economy. As I mentioned at the beginning, oil prices are one of the main drivers of inflation. Oil prices increased approximately 13% in only last month. And that's not the best news, nor for inflation, neither for households. Oil prices have been impacted by OPEC cuts in production, floods in Libya, and besides that, Russia announced ban on export of diesel and petrol just this week. Rise in oil prices is not the best news nor for inflation or households. I think that we could see even higher prices in oil on a short term, maybe even above 100. This week we are looking forward to more inflation data and house prices data. Besides that, Jerome Powell will give another speech on Thursday. I hope you enjoyed my video. I wish you all a great week and trade safe.